Right, so here is chapter 12. So everything we've learned up to till today, this is going to be a different chapter in regards to dealing with employees, okay? Or just dealing with payroll in general, okay? So first off, okay, again, this is introducing to payroll. So with that being said, when you have employees or when you have a business that has employees, you guys have to assume you have to compensate your workers for their money, right? And with that being said, not only do you have to pay them, you also have to be aware of how much taxes you actually are paying for having employees. You also have to decide whether you offer your employees some benefits and what deductions can be taken away from your employee's paycheck. Okay, so that's what we're going to talk about all about today. So first off, in order to even have employees, you need to have what's called a employer identification number. So again, it's very similar to a social security number, right? As a sole proprietor, you have the freedom to choose between either or, to either use your social security number or apply for a business identification number. So the difference between the social security, right? Obviously, with Social Security, it's issued based on the Social Security services, right? It's kind of like a personal identification number that you have as an American citizen. But another thing is, this is how the government keeps track of you and how you report your taxes. So especially when you're getting paid, right? You always have to give your social security number, or if you are a green card holder, you have to give them your temporary green card ID number, or in their words, the ID number that you can use to apply for working. Okay, but in this case, we're only looking at a social security number. As you can see, it should be like a small card. It could be green, it could be blue, or it could be white, as far as my best knowledge. It's usually your full name in there that's legally on every single document, and the number is 3, 2, and then 4. So that is what a typical Social Security should look like. Now, what a business identification number is, it's going to be issued by the IRS. And what this business identification number does is, this is how you report your taxes. So as a sole proprietor, you have the options to be able to use your own social security number, but they always recommend it's better that you keep your personal and your business separate. So most 1099s or independent contractors, they can have the choice to either use their social security number or a employee identification number. It's actually most best recommended to just have and apply for one. So it's issued by the IRS, and what this pretty much does is it lets you file taxes under the company name instead of your own personal taxes. So again, any business, most oftentimes it is recommended that sole proprietors, businesses such as partnerships, corporations, all of them are required to have this number. And if you can see here, it usually is a 2 digits and then 7 digits after it. So comparing and contrasting, one is on an individual level and one of them is just based on the business itself. Okay? Now, how do you apply for identification number? Well, that's where you go to the irs.gov and you apply on the form called the SS4 form, right? So this is where you go ahead and pull this file up, and what you're going to do is you're going to enter in your full business name, and usually this happens either with or after when you establish your business, right? When you apply for your business, right, you need your business license first, and then you can go ahead and apply for your employer identification number. So again, it's pretty straightforward as far as the form. You got to put your legal name in there, and etc., etc. Okay? And especially when you're dealing on a type of business that you are, right? If you are in the business of selling a certain thing, you are required to file taxes for these specific things, right? Especially if you're selling things such as, alcohol and tobacco or excised taxes. So the special taxes that you apply for most companies, right? Especially with this one, you are required by federal law to have an employer identification number so you can properly file your taxes. So again, this form you can find at the irs.gov website. Just type in the SS4 form and it should pop up a form and you should submit one so you can have a separate taxation identification number for you to properly file your taxes. Okay? So, with that being said, once you get your employer identification number, this is where we talk about, well, what happens when you have employees? So, there are a total of 6 different types of employees. Now, I'm only going to be testing you or requiring you to know the first 2, which is the common law or regular employees, and then your statutory employees. And we'll talk about what the difference are between the 2. I will discuss so you have an idea and knowledge, because what's going to be the difference between the first 2 and the last 4 that I'm going to talk about is that your common law and your statutory employees, those ones are going to be listed under your actual payroll list, and they are the ones that you're obligated to pay taxes on them for, okay? While the other 4 we'll talk about, they will be your workers, but they're not going to be technically employees to your business. What they're going to be is they're going to be considered expenses for your business, okay? And we'll talk about the other 4. So we have statutory non-employees, we have independent contractors, we have individuals that are referred by a temporary agency, and then we have leased employees, okay? So let's go ahead and talk about the most important one, of course, because these are the ones that we're going to be dealing with throughout the rest of this class, right? We want to make sure that if we employ these people, that we understand the necessary expenses that cost for us to have these employees, all right? So with that being said, well, what can they do for you? With a common law, right? They are the regular people that work at a specific time. So they come in, usually they're also known as the wage workers, right? They come in at a specific time, they clock in and clock out. So they have 4 key factors that you get to tell them what to do. So how the task is given, you tell them how you want it to be done, and lastly, you tell them when you want them to be done. All right, so this one you have full control of what your employee does for you. All right, and that's the common law, or also known as a regular employee. Okay, and what they do is they are working under you because you're telling them what to do. All right. Now, how it's determined, again, is based on their performance, any kind of service that's being done. So, yes. All right? So that is considered your, and they can be either or, whether you want to make them a wage rate or you can make them salary based, right? So typically that's what you would have your common law employees be, either wage or like an hourly wage or salary based, all right? Your statutory employees, okay, so they do work for your company. However, they do have a few minor things that are different from a regular common law employee. For them, they you give them the specific task, you give them when you want them to complete the task, and etc., right? They still follow under those laws. However, they are not the one that has to come in every single day and do a job, the specific task every single day. They're actually given a special task based on based on what you need them for. So for example, a delivery truck person, they're not the one, or a delivery truck driver. You employ them, but you don't require them to do the regular normal business that does the operating behind doors, right? They're not there every single day. They're not required to be there every single day. They're only required to do one specific task at a given time. And again, they are not the kind of that clock in every day and clock in every day either. They're the kind that comes every once in a while. So typical example, again, is a delivery truck person. It could be a full-time life insurance representative trying to sell insurance, right? They could even be a worker that works at home, okay? And they have, of course, the supplies that you supply them. And what they're doing, they could be just a regular sales representative, all right? So that's a typical example of a statutory employee. Now, I'm going to talk to you about the difference between them, because how you tax them and how you put them on your payroll is going to be a little different. For common law, you are required to take federal income tax withholdings, and you must pay for the FICA, which we'll talk about what FICA is, which is the Social Security and Medicare for this specific worker, okay, for the common law worker. You need to pay or, again, have 2 times tax for this employee. For your statutory employees, you do not have to calculate federal income tax withholdings for them. However, you must pay for their FICA, okay? So again, one difference here is you have a full-time worker that comes into the office every single day, clock in, clock out. While the difference is we have someone who doesn't have to come in every day, and their task is just to, whatever task that you give them to complete is whatever task that you give them to complete. Now, again, the difference is between the two, when you're filing taxes for them, one is you have to file the federal income tax withholdings. The other one, you do not need to. You're not required. However, both of them, because they're both considered employees under your company, you are required to pay for the FICA, which is their Social Security and their Medicare. All right? Any questions in regards to even determining whether one is a common law or even when one is a statutory employee? Any questions in regards to that? All right. Yes. Okay, so you want to be careful when using them as, like you just said, both of them are your W-2 employees, okay? Because they're actual employees. One of them comes into the office every single day to do your main operating business. The other one, they don't really do the main operating business, but they are still part of your company. They're still contributing to the company, but they're not there to help out with the main core of the operations. Okay? They're more the behind the scenes type people, yes. But they're still your employee. It's like, for example, your janitor, right? If you have a full-time janitor that comes in every day to clean up after you, they're considered your employee. However, they're not there for the main core of the operations. They're not there to, like, whatever your main core is. What if you're sales, you just have that person under your payroll because they come in every day to clean for you. You can also use them as an expense too, and that's what we're going to talk about next. Okay? Okay, so again, oftentimes a common law could and more or less be the people that are either hourly wages or they could be your salary-based people, right? For the main core of your business. All right? Any other questions in regards? Okay, so, all right. So again, so these two people are what you're going to be primarily focusing on payroll, all right? But let's put that for a second and talk about what the other options are if in case you don't want to go in that route of having full employees. You can have them either to be either or, either your statutory non-employees or your independent contractors. So these are your 1099 people. Okay, these ones you don't pay them on a you don't pay them or pay taxes for them because they're considered expenses to you. So again, when we let's talk about the first one. So a statutory non-employee. Okay, what they do is it's pretty much an employee that does all federal taxes for all federal tax purposes, but however, you don't treat them as your employee. What they are, if, for example, right, real estate people, right? They work for your company. However, they get to do what they wanted. They can determine how they want to get the job done, but however you supply them. Okay? So that means so the only thing that they're liable for is they're liable for their own income tax withholdings, as in they get the full money, right? And they are expense, right? You don't, the difference between our real life employees that you don't have them have to clock in every day. You don't tell them what to do. Okay? So that's the difference between that. You don't tell them what to do, and for this one, how they're, how they pay taxes is separate from our actual thing, right? Or they pay taxes separately. So again, another example would be a direct seller, right? You have a company, but they sell on their own. So they could be considered what you call commission-based employees. Okay? Now again, independent contractors are similar to statutory non-employees, except here's the difference. They get to determine what the result is. You give them a task, right? They supply themselves with whatever materials that they can, and they have the end result be different, okay? You give them a task, however, whichever way they get to the end result, or to complete the task is how they can determine how they want to get it done. So in this case, that is what an independent contractor is. Most cases, it's like doctors, right? Doctors, dentists, right? They all work in the same office. However, every doctor is not going to treat you the same way. Every doctor is going to have their own opinions. Every doctor is going to have their own recommendations. And every doctor is going to have their own, skill. Like if it's a surgical doctor, right? Not one doctor is going to be able to complete the same exact surgery. So they're given a task. However, the end result's going to be different, and they supply themselves whatever they need to get the task done. So that's the difference between a regular common law person. You're given the task, you tell them what to do, you supply them, and you tell them when you want it done. Here, it's different. You just give them a task, they give you the end results, and they tell you when they're going to complete the task. So that's the difference, okay? And so again, with them, how they file their taxes is they are the typical 1099. We call them 1099 employees or 1099 workers, but they're not technically employees. They just work for us. So they're going to be considered expenses, and they get to take their full money. We don't We don't calculate federal income tax or even calculate taxes for these type of employees. They get to take the money 100% and they have to pay their own taxes at the end of the year. Okay, so that is those kind of employees. All right, any questions in regards to these kind of employees? So they're all considered expenses to us. They're not something that we owe. They are just completely separate people. Mm-hmm. Okay, so if you're a 1099 contractor, right, or a 1099 worker, right, no matter who is the company, you are required to still give them you have to help them fill out their 1099 because they're working for you, right? So if they fail to file that, or if they fail to report to you, right, for you to sign off their 1099, then it is required that you hold them 28% of their actual paycheck for tax purposes. So that's what it says. Okay, but again, this is just FYIs for if you do go into future. Now, I don't know if these numbers are still holding as of today. Of course, with the election going on, that means starting at the end of November, we're going to have a whole new income tax numbers and everything. So these numbers will probably not stay the same for this year. It's going to change in at the end of this month. So again, this is homework for you guys. If you guys do plan on potentially having your own business and you would like to have an independent contractor versus an employee, then that is where you're going to have to do your homework. Go to irs.gov because that will tell you every detail on every specific employee that you want to employ, if you would like one. Okay? So yes, that's just a little FYI. It's not something that you truly need to know. It's not going to be on the exam. Okay? So, yes. Right, any other questions? Okay. So here are the last two different types of workers or employees. Air quotes. Okay, so one of them is a temporary agency worker. Okay, so if you guys have done this before, you guys have a certain criteria of what kind of job position that you want or an area, right? So you go to a temporary work agency and you apply to their services, and what they do is they are the ones who find the work for you. But you work for the temporary agency. You don't work for the company that asked for the help. Okay? So for example, Robert Half. Robert Half is a temporary work agency. They find jobs, and usually these jobs are very temporary. Maybe it's a 6-month project, but it doesn't mean it is a long-term employment. So you want to be very careful about that because, again, you do not pay the workers. You get paid based on the company. They may pay you a different rate than what they charge the major corporation to get the job for you. Okay? So with that being said, you work for the temporary agency, not for the company that asked the temporary agency to actually require the work for you. Okay? So that's a temporary work agency. We know who they are. We know what they do. They are literally temporary work, okay? And what they do is You don't get paid anything. They don't give you any benefits. You just take the money as is or whatever that you made an agreement for, and that's it. Right? You have to pay your own taxes at the end of the given term. Okay? Now, what I've seen many times is that you have your temporary work agencies. You also have your leased employees. Now, the leased employees, they sometimes go. They kind of go hand in hand. They are the type of people that say, "Hey, if you come from a temporary work agency, what a leased employee can do is they can buy out the contract from the temporary work agency and actually fully employ them as their own." So that's what you call a leased employee, all right? So, of course, when you're under a temporary agency, you're required to sign a contract saying, okay, well, if you can find work for me, I'll work for you for X amount of time. Now, what the major companies can do is they can buy out the contract so then you can work for them instead of the agency, okay? And usually, with that being said, you're still, again, if you're doing the leased employee, the leased employee as under a contract, right? You don't get employed until afterwards. So again, you're still paying the agency for whatever amount that you have this person as a potential employee. And then if you choose to buy them out, then that's what happens afterwards. So again, you're still a temporary work agency until they buy you out. So you're considered a leased contractor. So oftentimes these contracts can be anywhere from 6 months to a year, before they decide to buy out the contract and have you fully employed. Okay, and that's what these people are. They're all still expenses. The company still doesn't pay you as a full employee until they buy out your contract. So they still pay the agency as an expense. Okay. So then that means the company is not responsible for anything for these employees. So again, with that kind of mindset, it's actually going to be a lot cheaper to temporary employ or even just have a leased employee or a leased worker to work and get the task done. And you just pay them off as an expense. Because again, if you are a small company, you might not be able to afford everything it is for your employees. All right? So this might be an alternative route for you, especially if you are a small company. So any questions between the temporary and the leased and all the employees that we talked about? Okay. So there are a total of 6 different types of employees. There are a lot more if you go to irs.gov, but these are primarily the ones that you typically would normally see that are often used right now. But there's other lists. If you go to irs.gov, there is a few more. Okay. So again, we are going to bring it back and talk about the payroll process. Okay. And with that being said, we're only focusing on having common law and statutory employees. So first off, let's talk about the process. What are the necessary processes that you need to take in order to set up or even start a payroll process? All right. Well, for employees, you need to determine, obviously, you need to submit to the government or the whatever local agency, state agency, the employment office. You need to report that you even have employees. That's definitely number one. You also need to collect their W-4 forms. You need to determine what their payment rate is, whether you choose to be wages or salaries. Then you're going to calculate the income tax withholdings. And then you need to calculate, obviously, record what their total deductions and et cetera, et cetera. and then you get your final step, which is to pay them. Okay? On the employer side, all right, you need to calculate the total amount of benefits that you're giving them. You also need to introduce them to what your contributions are, right? Most companies are 100% for FICA, which is Social Security and Medicare. And we'll talk about each and every single one when we go through each step. All right? And then, of course, depending on what state they belong to, I know that federal income tax is required for all states because it's federal. And then, of course, for state, it depends on what state you belong to, whether you do or not have state unemployment tax. And then, of course, workers' comp, and we'll talk about workers' comp in a minute, right? And then the next thing is you're going to set up a payment plan or what do you call it? We call them deposits to those local agencies for us to pay our taxes properly. And let's begin. Okay? So the first thing is to submit. So we're going to talk about the employees first. It's always going to be employees first and then employer last. Okay? So the first one we got to do is we need to submit to the employment center, whatever it is. In the state of Nevada, it's called DETR, okay? Are you guys familiar with DETR? It's called the Department of Employment Training and Resources, all right? So what that is it's basically a organization or an agency that basically records everybody's statuses for employment, all right? It's also the places, again, we have the training section. So what the DETR does too is it also reports unemployed people as well, individuals as well. So again, here we have in the state of Nevada is DETR, which is, again, the Department of Employment and Training Resources. And again, it's specified in the Nevada. So you want to make sure that you submit a form to this agency. And what you're going to submit is, so there's a difference between employees W-2 form and employer W-2 form. What the employer W-2 form is it's basically a list of every single employee and what they do with all their social security, like all their information, such as their social security number, and how much are wages or how much you're going to report to them. Okay? It's important that you submit this first before even calculating anything for the employee, because again, everything that does with taxes is a step-by-step process. You need to inform the business before having you need to inform the government on what your business is doing. And if you do have employees, and that's where they start calculating the taxes properly and they start holding it from you or retrieving the taxes from you. Okay, so the employee, all right, so that's where the next step is, that the employee needs to submit to you as the employer a W-4 form, all right? Now, with the W-4 form, all right, if this form does not look familiar to you, that's because in 2020, they completely changed the W-4 form, all right? So I'll show you a live W-4 form that I've retrieved from irs.gov, okay? So let me go ahead and show you the difference between the 2019 and the 2020. So here is the I believe this is the 2019 one. Let's see, W-4 form for 2019. So this one was actually a lot easier to fill out. All right, you got your name, your social security number, of course. And then as you go ahead and fill out this little form, right, you got to fill out the second page first. right? And I believe this one is very similar to the 2018, 2017, and prior years. Here, you get to mark off of how many withholdings you want to claim. So again, the first one says, would you like to claim yourself? Then you say, yes, I do. So that's 1 point. All right. Would you like to file as married? You want to file together or file separately? There's 1 point. Do you want to claim your children? Or, I'm sorry, not children, your dependents. There you go. You say how many number of dependents do you want to claim? X, Y, Z. You put the number there. And then, of course, if you want to, be the head of a household, X, Y, Z. So this form looks familiar to everybody because this is what happened in 2019 and prior years. Now, once you fill this out, what's going to happen is you're going to go back to the main page up here and you're going to tally up your total amount of withholdings. All right? And that's how we determine out the next portion, which we'll talk about after a couple steps later, right? We'll talk about what you do with those number of withholdings. So that's the 2019 form. Now, if you guys, and you actually, not if, but you guys will, because you guys are unemployed right now, you will have to fill out this new mandatory W-4 form for your next employer, which is the 2020 version. All right. So the beginning is very similar. All right. You got your name and your social security number, XYZ. All right. Now, this one, okay, is considering that, of course, with the new day and age, right? Now that we have, other jobs out there, such as you can have multiple jobs. So what they decided to do is they decided to create a new form that also recognizes that a person can have the status of having multiple jobs. And, basically, instead of doing multiple W-4 forms for your different types of jobs, this is where you can fill out all of that in one sitting. All right? So, again, this is more geared towards for people who do have multiple jobs, right? Such as they have a full-time job working at a casino. And then after they finish that job, they do Uber or they do Lyft. They can also do Postmates, right? That's considered a secondary income, right? Some people do multiple. They do Postmates and they also do Lyft. So that's considered a third source of income. So with all of those information that you have there, this is where you're going to report every single one. Obviously, you're going to report which one's your actual primary income, which is going to be your full-time job. What is the one that's actually your stable job, where, Postmates and Lyft, things like that, those are part-time or temporary jobs. They're not your full-time jobs. They're not your primary income, your primary source of income. So that's where you're going to report that. Now, I've read this. I've read it multiple times, and this is confusing, all right? And again, if you do have those secondary or tertiary or third job, right? This is where you can just fill it out all at once, okay? And then again, how they, if you have dependents or you claim those, you're going to actually claim them as based on how much they cost per year. Now, don't be shocked. They think that a dependent will cost you $2,000 a year. Now, I don't know what kind of dependent costs $2,000 a year, but that's what they claim it to be as. One child or one dependent is $2,000 a year. And what you're going to do is you're going to calculate it based on an annual gross wage, or amount. Okay? And that's pretty much most of it. And then any other deductions that you have in regards to claiming. Again, this new form is a lot complicated, and I would actually recommend your employer to help you fill this out, because they're the ones that's filing the taxes for you, so they should be an expert in regards to filling out your 2020 form. So moving on forth, this is the form that you guys will be filling out, all right? Even if you don't have a secondary or a third job, you still have to fill this out. You still have to fill out the primary source of income first, all right? And here, again, you can claim your status as well. So any questions between the difference between the W-4 forms for 2019 and the 2020? Okay, so good luck to you guys for filling out the W-4 form. All right, so again, yes. Now with that being said, what I'm going to be teaching you is that I'm going to disregard the new 2020 form, okay? Why? Because the next portion that I talk, or not the next portion, I think it's 2 more portions beyond this. It's going to be determining how much tax to withhold. Now, I do have both forms on the website for how to calculate the income tax withholdings. Of course, because we're still in 2020, right? We haven't got the new tax forms just yet. I'm going to teach you the old one using the 2019 version. Of course, moving forward, I have to make adjustments and teach you the 2020 version. But of course, I'm going to teach you the simpler version first while you guys are still here. So again, if you guys are planning on opening up your business in the future, again, do your research and decide if it's even worth it to have employees. Okay? So with that being said, so once a employee gives you a W-4 form, that's where you get to determine how many withholdings they have. Total number of withholdings. Now, this is an FYI. If a employee does not give you a W-4 form, you can tax them at the highest percentage, which is 28%, and at 0 withholdings, meaning they claim nothing, right? Because they didn't file the taxes properly for you, or they didn't file the W-4 form, right? Or they have to fill it out, right? You cannot fill it out for them. So if they did not submit one to you, you are obligated, or you're subjected to tax them at the highest percentage with 0 withholdings. Okay? FYI. So once you've done that, now this is where we start determining out the rest of the payroll process, right? First, we need to establish, well, what kind of payment period do I want to have? How often do I want to pay my employees? Okay, so here are the options that you can choose to pay your employees. Now, again, some of them are not realistic for a company, right? So the typical ones that you would normally see would be a daily, right? So any business like Lyft or Postmates, they allow you to collect your earnings at the end of the day. So that is a daily or miscellaneous, okay? You have a weekly basis. So again, I know a lot of companies that do weekly, right? They pay you every Wednesday, or they pay you every Friday, depending on, how the business is, if they want to file or calculate it every week. You also have bi-weekly. Now, bi-weekly and semi-monthly. Let's talk about the difference between a bi-weekly and a semi-monthly, because they are similar in aspects of how often you get paid. Bi-weekly is every 2 weeks. So that means at the end of the year, you should collect a total of 26 paychecks, because some months have 5 weeks, right? I believe 2 months have 5 weeks. So that's why you get a total of 26 paychecks. Where semi-monthly means that you get paid in the middle of the month and at the end of the month. So typically it's always the 15th and 30 or 31st of the month. So with a bi-weekly paycheck, you're more likely to have the usual, depending on if you're a full-time employee, your paycheck should be stable. Now with the semi-monthly, right, you have a little flexibility there. You could see more money coming in because of the number of days that you work. And then also if it's at the end of the month, whether it's 30 or 31 days, you might get a little extra. So that's the difference between bi-weekly and semi-monthly. Bi-weekly, you get total every 2 weeks is a total of 26 paychecks per year. And semi-monthly is a total of 24 checks per year. And it's on the 15th and the 30th or 31st of the month. You can also receive money or get paid on a monthly basis. So most government agencies, such as Social Security, if your benefits, usually come every month. They don't give you every week, every bi-weekly or anything. They usually pay you every month. So I know that some VAs, they get paid every month as well. So they go on a monthly pay period. Now, things that you would normally not see is someone getting paid every 3 months. I mean, unless you're salary based, could be a reason why. But of course, I don't know anybody that can survive without a paycheck for 3 months. So, so quarterly is an option. Semi-annually is every 6 months. So usually people who are like lawyers or something like that, they won't get paid until the case is over. So usually that could be a semi-annual payment. And then lastly, annually. Now, I don't know anybody that gets paid at the end of the year or every year. However, people who are wealthy or own a business, usually they can withstand, they have their own money. So an annual income, usually they can get paid annually. Now with an annual thing too, this is also when you're doing salary based, like you're making a rough estimate. Well, this is how much you should get per year. And then they'll choose like how often they want to pay them. But it's going to be totaling up an annual payment. So that's what usually salary bases are. This is how much money you get paid every year. So you need to determine which one works best for you. The most common one is bi-weekly and semi-monthly. You see more often companies go for this. It's easier, and instead of having to calculate the taxes, which we will show you exactly how to manually calculate each tax. And you tell me, how often should you pay your employees? Because, yes, having to deal with the taxes is a doozy. All right? So with that being said, we got to determine, right? Is my employee going to be on a wage base or are they going to be based on salary? So again, with that being said, an hourly wage is typically what you would normally see in a wage person. It's usually hourly. Okay? And, I'm so sorry. Go back. So usually with that being said, they are based on an hourly rate. Okay? And all states have a different minimum wage. Okay? It's not federal, it's state-based, okay? And I believe now, in the state of Nevada, it was $8.25, and I believe it actually went up recently due to the pandemic. I believe it's now $8.75, but now that we have elected a new president, and we're electing a new state and a new mayor and whatnot, this number may increase due to the pandemic, okay? So, but just for an FYI, right now it should be $8.75 if I'm not mistaken. But again, this number could be changing depending on what state you are in. So it's always good to know what your minimum is, because there are requirements where you have to meet that that minimum. All right. And then, of course, other things that you can also either expected is if you're a tipped person, right? So, or if you are based on, you know, yeah, if you're based on tips, wages, which here we are, because in Vegas, again, we're primarily hospitality. We primarily, our primary income is based off of tips. Okay, so that's also something that you want to consider as well, whether you want to report that as your wages or consider that as part of your income that you earn, right? Other things that you could also have is if you want to establish any overtime payments or any bonuses and commissions, right? Of course, at a salary based, it's going to be based on an annual income. Let me see. Other earnable income could be any bonus and commissions, any overtime pay, which this is actually funny because with a salary base, it doesn't matter how many hours you clock in, you're still going to get paid the same. But some companies may pay you extra if you do over a certain amount of hours. But yes, yeah, that's pretty much what you can offer to your employees in regards to just payment itself, right? So any questions in regards to payments or what they can earn? I'm sorry, this is earnable income. Okay. So once you establish an earnable income, right, the next step here is going to be determining any other deductions or any other benefits that can be taken away or added to your employee's paycheck. So other benefits may include such as fringe benefits, right? If you work for a company, they might be able to offer special discounts on like, for example, they can offer special benefits for the employees to be able to get hotels at a discounted price. That's going to be considered a fringe benefit, right? Because you work for the company, so they allow you to get the discount, but you actually have to pay into it. All right. Other things too could be they could pay you on holidays, right? They can also give you vacation pay, sick pay, and they also have retirement benefits. So example be a 401k. And they also could do other insurances besides Medicare, right? They can provide you vision, dental, even life insurance. Okay, so all of those are going to be considered either a benefit or a deduction to your paycheck. Now, most of these things that you do claim here is going to most definitely be a deduction, meaning you're going to take home less, especially if you have a 401k plan or an IRA plan. Okay, so whatever the retirement benefit plan is, or if you do have to pay a portion of your vision, health, and life insurance, those are usually going to be considered deductions to your paycheck. Okay, now again, how you record your hours or earnings, right? It's pretty straightforward. You can have a check-in log box. You can have them record their own timesheets themselves. You can have like a little punch-in clock. You know, anything that you want to utilize to help, you know, record the amount of earnings that an employee can thing. You know, if they want to clock in on a holiday, they can clock in on a holiday, and then they'll get paid for a holiday. So, et cetera, et cetera. So these again are going to be things that either help your paycheck or reduce your paycheck, right? And those are things that you should consider, because when you have employees, one incentive is to keep an employee around, is to offer these benefits. But again, if you are a small employee, you might not be able to afford these benefits. All right? So you have to consider that kind of situation too. Once you've done that, what's going to happen is, again, you're going to get your total earnings. You're going to have your additions or your benefits or your deductions out from your paycheck. And that's going to be considered your gross earnings. Now, once you get your gross earnings, this is where we need to start calculating federal income tax withholdings. Okay? Now, what a federal income tax withholdings is, it is, in other words, what you contribute to, what amount of taxes you contribute to the government itself. Okay? So everybody has to pay their taxes. Okay? And what this taxes does, it either goes to, either federal government agencies, or it actually goes into whatever benefits the income tax does for the company. Not for the company, for the federal government. All right? That's what this income tax is. You're required to pay your taxes to the government, to the federal agency, to the government. So, yes, it is by law, right? And that's why we have to file our taxes every year to either complete our income taxes or whatever deductions that we have, whether it could be, deductions on our home, XYZ, right? And then it's either at the end of the year, you can either claim, if you do claim, any extra things that you need to pay for the tax, but what they do is they audit it, your whole entire tax form, and they see, well, here, you deserve your money back. So that is what the whole federal income tax withholding does. Now, yes, you can also claim to take the money ahead of time, or to not claim any withholdings whatsoever, or what they call it, I forgot what it's called, but you get to take the total amount without the taxes being withheld. If you do that, you are responsible to pay all the money that you owe to the tax at the end of the year. So, smart way of doing this is, don't take the money and have to have like $10,000 to pay at the end of the year. You're better off of getting the tax taken out the minute you receive your paycheck. All right? Now, we're going to be, with that being said, we're going to be utilizing a form called the Circular E form. So we have two types of methods to be able to calculate our federal income tax withholdings. Percentage method and bracket method. All right? Bracket method is actually these two types of methods are actually not very different. They're very similar in a sense that you have to search up the type of bracket you belong into, and that's pretty much it. Now, the difference between them is, one, you're going to calculate the number of withholdings, then you're going to look at your taxable income, and then you're going to find the bracket you belong to, or not bracket, but the bracket that you belong to, and you're going to determine what percent that you're going to be taxed at. Where the bracket method is literally, you're going to go from how much money you totally make at the end of your total amount that you earn, and you're going to find your bracket that you belong to, and it's going to give you the calculation automatically. Meaning like how much you're supposed to take out from your paycheck. I do not do the bracket method. We're going to be focusing on the percentage method, okay? I only want you to know one and not both because, again, they are similar. If you like to learn on the other method, you're free and welcome to do that at irs.gov. Now, again, with that being said, we're going to be utilizing what's called the Circular E table. And this is going to be what's called the tax table that you normally would see in on irs.gov. Okay, so here is a typical example of what the tax form or the tax table looks like for a Circular E. It's going to be one, based on the accounting period that you determined. Second is going to be your marital status. Are you married or are you single? Okay, and then it's going to be, and this is after you've done your deductions for your withholdings, you're going to determine how much taxable income is going to be subjected to tax. And that's where you're going to look for your bracket that you belong to, and you're going to determine which percentage is going to be taken out of your paycheck to go towards the government. And we'll talk about the step-by-step process on how to calculate. But I do want to let you know that I did post the Circular E table on the Google Classroom, so you have all of it. So you have it for a weekly table, you have it for a bi-weekly table, right? And you have it for monthly and or semi-monthly and monthly. I only usually do the typical one, so I only have the four tables here. And again, it's for married and single status. So this is on the Google Classroom for you, just so that you guys can exercise, practicing payroll. But again, I will provide the table for you. I will provide everything for you for the exam. You don't need to have this worksheet on the side. Okay? So without further ado, let's go ahead and start looking at the calculation process for the for doing federal income tax withholdings. Okay? So first things first is here are the steps that you need to take, and we'll go through it one at a time. So the first one is determining how much earnable income you have. You're gonna deduct your total amount of withholdings, tax withholdings, and you're also going to subtract you're going to subtract the total withholdings. Once you find out what your total taxable income that's available to be taxed for, that's where we go to our Circular E table and we determine which bracket we belong to. And then once we do that, then we calculate the percentage and then subtract out all of that information to get our total amount of withholdings. So with that being said, let's go ahead and go through each one. So here at the bottom of this slide, you see here is going to be called table number 6. This is where you are going to determine how much it costs for one withholding. All right, as you can see, it gives you the payment periods. So if we do bi-weekly, it's going to be $165 for each withholding. If it's weekly, it's going to be $83. If it's daily, it's going to be $17. Okay, etc., etc. So you will be utilizing this table here to determine the number of withholdings you need to withhold. All right. So let's go ahead. Here's a little table here that I set up so it's easier for you to be able to calculate this. So here's the scenario. So L is a single woman with 2 dependents, okay? She makes $15.25 an hour, and she worked a total of 45 hours, okay? Her payroll period is going to be weekly, all right? So step 1 is let's determine how much earned income or earned wages she has so far. So if she makes $15.25 an hour and she worked a total of 45 hours, what is her total earned wages? $6.86.25. Good. All right. So step 2 is now going to determine the number of withholdings that you need to deduct from her paycheck. So again, with the W-4 form of 2019, right, because we get a total withholdings, we're going to refer to our little table here in our table, the table 6 table, and we're going to determine, okay, well, she has 2 dependents, okay? And if one withholding on a weekly payroll period is going to be $83, and she claimed 2 children. So what is my total amount of withholdings here? Good. I've already done the calculation here for you. So what's going to happen is that's where step 3 is. Step 3 is going to be you're going to subtract that to get your total taxable income, or also known as your total, I believe it's gross. Yes, gross. Yes, it's gross, yes. Net is at the end of all your taxes, yes, so gross. So your gross earnings here is going to be 686, subtract the 166. So what do you get there? What's your total gross? Good. So your total here is going to be $520.20. So that's your total gross earnings, all right? Now this, once you get this number here, this is now step number 4 is we're going to go and look at our circular E table to go ahead and find which bracket we belong to. So let's go ahead and look at our circular E. We're in the weekly payroll period. We know she's single. Okay, so we have to focus on the right side now. And we're going to determine, did she make more than $0? Yes. Did she make more than $73? Yes. Did she make more than $263? Yes. Did she make more than $845? No. So we got to go back one up. So she made more than 263, but she made less than 845. She made a total of 520. So this is where we're going to take this line right here. If we go right across, so section C says the government is going to automatically take out $19 from that paycheck. Automatically, you're going to get taxed at $19. Okay? Anything in excess is going to be charged or taxed at 12%. And the government is going to let you keep $263. All right? So with this piece of information here, this is where we're going to calculate our total withholdings. So here, I'm going to tell you this. This is how I do it. We're going to find our bracket, and we're going to subtract E, multiply by D, add C. What does that mean? Here you go. So we're going to take our total gross earnings. We're going to subtract the amount that the government lets us keep, which is E, which is the $263. Okay? So therefore, we get a remaining amount of $257. Well, we're going to take that's going to be considered our money that we have in excess. Okay? Once we get there, then we're going to multiply by the 12% because that's how much extra money we had from subtracting at the amount that the government lets us keep. So we're going to take our $257.25 and we're going to multiply it by 12%. And what do we get? The $30.87. And then we're going to also add in the $19 that the government's going to charge you regardless of what you make. Okay, so if you look at the table here, it's going to be the amount that the government's going to take from your paycheck. It's going to be the amount that, yeah. All right, yeah. So that's the one that they're going to take automatically regardless of how much that you make. They're going to tax you and take away that amount no matter what you make. All right? So there you go. So now once we add our total amount of excess, we're going to add that $19 to get a grand total of tax withholdings to be $49.87. All right? And that's how you solve for the federal income tax withholdings. All right? Any questions? Okay. All right. Yes. So that's only one section that we need to calculate for this for L. Okay? That's only one section, right? So that's just doing the federal income tax withholdings. The next section we have to do is we need to calculate how much federal insurance contribution act that L is going to contribute to her for her paycheck. This is a federal law and is required by every single individual to take out from their paycheck immediately. You must contribute. If you're a U.S. citizen and you're working, you must contribute. All right? So first one's first is going to be, it's called the Old Age Survivors and Disability Insurance Act, or also known as OASDI, also known as Social Security. All right? They use this big fancy word, but to summarize it up, it should be Social Security. And what it is going to be 6.2%. And it's been 6.2% for the longest time now. And it's still going to be 6.2%. That's how much you must take out of your paycheck every paycheck you do. Okay? So with that being said, however, there's only so much you can claim in regards to contributing to your own Social Security. The maximum or the limit that you have is you can only collect up to $137,700, and that's as of 2020. So that means in a few months, couple months from now, it might raise a little higher. Okay. Now, if you can think of any kind of job nowadays, whether you're a blue collar or a white collar, how many years do you need to work to be able to get to 137,000? A lot of hours, a lot of years, a lot of paychecks. So if you're only contributing 6.2%, boy, how long do you need to work before you can claim a lot of Social Security, right? And what I think it's raised now to you have to be 66 in order to collect Social Security. So think about that. Okay, obviously, the more money you contribute to Social Security, the more money you get to receive every month after 66. But of course, with the regular blue collar and the white collar, they never actually reach this amount. So they're always receiving less. Okay? And, that's how this works. You contribute to your own Social Security. All right? So again, here we're going to apply this notion here that if L worked 15 or earns $15.25 an hour and worked a total of 45 hours. So this is going to be based on the total earned income. All right? No deductions applied, nothing. This is the total earned income. You're going to take the 6.2%, and that's how much Social Security you're going to be taking away from each paycheck. So that's a lot. If you earned $686 and you're already taking $42 worth of Social Security, that's a lot. Okay? So then the last thing that we're going to also be talking about is called hospital insurance, which is also known as HI, also known as Medicare. Okay? And Medicare is only 1.45%. And the great thing about Medicare is you can, no matter if you've already reached your limit of Social Security, Medicare has no limit. So you can contribute to it as long as you continue working. It's only 1.45%. And that's actually not a lot. All right, so let's go ahead and take back our example here. L makes $15.25 an hour. It works a total of 45 hours. So again, you are also using the number of earned income. So a total of $686.25, and you're going to multiply by 1.45% to give you a grand total of $9.95. Like I said, it's not a lot. Okay? So one more section and then I'll let you guys go. So now we're going to calculate how much total income or how much total paycheck I'm actually going to write to L. So we have a little account called salaries and wages expense, and that's going to be considered your total earned income. So again, L made $15.25 multiplied by 45. Her total salaries and wages expense is going to be $686.25. However, you need to take out the federal income tax from her paycheck, which was, we calculated earlier, for $49.87. You also need to take out Social Security, which was for $42.55. And then lastly, you need to take out the Medicare, which was for $9.95. So from her paycheck alone, and she only claimed 2 children, her paycheck is only going to be $500.83. I'm sorry, $583.88. So that's almost $100 that she had out of her paycheck, and that's how much she's actually taking home. Now, imagine how many benefits and how many deductions she has to take if she starts claiming 401k, paying for her vision, dental, and whatnot, because usually those are based on a percentage. Okay? So imagine how many more items you can add to this list and deduct from her actual paycheck. So for her working 45 hours, she's only receiving $500. Okay? In this case, we don't offer overtime. Okay, so yeah. Tip, yeah, in the real world, yes. Yeah. Yes. But in this case, we're just dealing, okay, so what I want you to get away from this is I only want you to understand the 3 things that are typically taken out of your paycheck. Okay, whether you have deductions or not, benefits or whatnot, the only thing that 3 things I want you to start calculating is the federal income tax withholdings and FICA, which is Social Security and Medicare. Those are typically the first 3 things that are going to be taken out of your paycheck anyway. Every company will have its own benefits and its own deductions. So in this case, I offer no benefits and I offer no deductions. So she's not getting anything, nothing. All she's getting is these 3 things, All she's getting is these 3 things taken away from her paycheck. And that's exactly what I want you to get away with. I want you to be able to just build or to calculate the most simple taxes that come out of any typical paycheck. All right? Any questions in regards to this? Okay? All right, it is 4:20 right now, so what I'm going to do is Thursday, we're going to go ahead and talk about what happens when once we've calculated the employee's paycheck, we now have to calculate the employer's taxes for having L as an employee. and that's going to be for Thursday. Okay, so again,